Wednesday, May 25th, 2022, Bernake 64, home of alternative economics and contrarian views. Today we're going to look at how cash, stocks, and bonds are trash in the stagflation. And even one of the most prominent hedge fund managers, Ray Dalio, is saying it, and he's been saying this about cash at least for a year or more, and now he's saying it about stocks and bonds. So the way we're going to look at this today, we're going to reference, of course, an interview he did with CNBC. I think it was yesterday. And we're going to reference as well a speech by Bernake about 20 years ago, an article I wrote back in 2007, and we're going to look at some UK economic data that came out yesterday. And we're also going to look at UK economic policy, which is really worrying. It just shows that in periods like this, politicians do all the wrong things and they accentuate the troubles. So let's start with Ray Dalio. Yes, he was at Davos. I'm not going to judge him for that. I'm just going to look at what he was saying over there to help us try to navigate through these difficult times, not only socially, economically, politically, but also monetarily and financially. I'm going to put a link to this clip here. Well, it's not a clip. It's only a 4-minute video from CNBC television. They have a YouTube channel. And this is, I think, Andrew Sorkin interviewing him. It's from yesterday, the video. And Ray Dalio goes on to say that we are in a paradigm shift, that decades of bond bull market is finishing. I know bonds rallied yesterday, but that's just a short-term thing, in my opinion, and I think Ray Dalio's opinion as well. He thinks that people are going to start to slowly realize that cash, stocks, and bonds are not going to be a good place to be if you want to maintain the purchasing power of your wealth or savings. And yeah, he calls both, he calls cash, stocks, and bonds, all three, trash, because he thinks we are going into a 1970s style stagflation, and I agree with him. And you just have to look at this, courtesy of Deutsche Bank. Yeah, I know Deutsche Bank. I guess they can be useful. Someone tweeted this out yesterday, and I did a screenshot of it. It says Figure 1, annualized returns of selected financial market and commodity assets during the 1970s. So let's start from the right-hand side. You've got S&P 500 total return. So the real total return in the 70s during stagflation was minus 1.4%. The nominal return, of course, was higher, but what we're really looking for is the real return. 10-year Treasury, minus 1.2% real return. It doesn't sound like a lot, but if you compound that annually, it is. Even copper didn't do very well. I think it's because copper is a very important commodity in terms of being a bellwether for the economy. If the economy is doing well, copper does usually fairly well. So even copper dropped 1%. Home prices were up slightly. Not too bad. A real return of 1.3%. These are annualized. So you would have done okay with home prices, with houses. Aluminum or aluminum, 1.5. Nickel, 2%. Real return. So what this means is that anything that has a positive real return annualized means that it beat the rate of inflation. Wheat 3.8, WTI crude oil 19.2, so that did really well in the 70s. And now we come to gold and silver. Look at gold, 21.7. And in the last 20 years or so, we've had a return, a nominal return on gold of about 10% in every fiat currency. And I'm going to come to that in a minute as well, about how fiat currencies, and Ray Dalio mentions that as well, that all fiat currencies are trash because they've created so many of them. They've kept interest rates so low. Look at silver. Silver, just beat gold by 0.8%. It doesn't seem a lot, but when you compound that annually, it makes a big difference. And the big winner was Brent crude, 24.4%. And I've spoken about this before. If you look at the chart of gold and silver in the 70s, they weren't going up the whole time. There were periods where they were correcting, where they didn't go anywhere. So if you'd gotten out of gold, for example, at the end of 74, 75, around $200, you would have done okay and you would have bought it back at 103. But if you saw it going back to 103 and didn't go back in and said, well, the bull market in gold is finished, you would have missed out a lot of the run of the 70s, because gold eventually went above 800. So that's what I'm trying to say here. You got to think of dollar cost averaging these. So now I want to go back quickly to 2002. This is when I realized that the central bankers were embarking on a very dangerous experiment. and having read history about monetary events like the Mississippi bubble, like the assignats in France in the 1790s, like the Weimar Republic, I knew that it was always dangerous when people like Ben Bernanke and others, Ray Havenstein and John Law, when they thought they knew something better than anyone else and that they could change the laws of nature, it always worried me. And this speech from Bernanke on November 21st, 2002, I remember it really well when it came out. I was working in the markets and I thought it was really significant. He was talking about deflation, making sure it doesn't happen here. It's his famous helicopter speech where basically he set the tone for the next 20 years, that central bankers were more concerned about deflation and that they would do everything. They would print money or create reserves out of thin air in the trillions through QE. They would keep rates at zero and even negative. And I knew it would backfire, that it would lead to eventually where we are now. And that's why gold has done so well in the last 20 years, because deep down people know that we're going to get some kind of currency collapse. I still think hyperinflation is very possible. Ray Dalio is not talking about that yet, but I think it's a possibility. And it's one of the reasons why I have been saying since 2006, or about 16 years, that fiat currencies, they're all sinking. And they're not sinking against the dollar, they're sinking against real things. And the best measure, of course, the yardstick of value for fiat currencies is gold. And why is that? Well, because gold has been the best yardstick of value and wealth for thousands of years. And I don't keep the blog anymore. It was called forsoundmoney.com. I kept that blog while I was still at work, so I didn't have the time to continue it. But Market Oracle kept part 2 of this. It was a part 1 and 2. these articles that I wrote, currencies, they're all sinking. Part 2, I knew then that this was going to be the case, and that's why being in gold has been a good way to protect your savings. And here I'm talking about holding it as money, as savings. I'm not talking about investments. It's like holding a currency that keeps its value. It's beaten all the other currencies, or fiat currencies, or national currencies. And yes, this is where we're now. It's the culmination of this sinking. And there's a note saying about how a company or someone goes bankrupt. First it's slowly, and then all of a sudden they go broke. And I think that's where we are right now. So with that, let's quickly look at some data from the UK that shows that we are going deep into a stagflationary period. Yeah, I know Joe Biden was asked in Tokyo whether the economy was in a recession, and he had a really good answer, really detailed, and it was no. But anyway, yesterday we had UK Services Purchasing Managers Index, and the UK economy is really probably 75-80% a service economy. Manufacturing is a very small part of the UK economy. So anytime the Purchasing Managers Index survey goes below 50, it means the economy really is going to contract. The previous number was 58.9. The number that was published yesterday was expected to drop by 2 points to 56.9, but it dropped precipitously to 51.8. So I think that's a really bad sign. And the last time, of course, we went below 50 was in 2020, and also last year, in the beginning of last year. And I expect this to happen again. And another two things that makes me worried about what's going on here in the UK, but you can apply this to all other Western countries because we've got the same kind of politicians. They are really clueless about things, in my opinion. So farmers here in the UK are talking about bread production, that costs are continuing to spiral. There's two kinds of wheat that's grown for feeding farm animals, and wheat that's grown for milling, for bread and other nutritional products. And farmers are complaining here because the government here in the UK, they've set policy to have wheat and corn for biofuels, and they're saying they're not going to be able to provide enough bread if this continues. So government policy there, trying to move into this green agenda, hurting farmers, and it's going to hurt you, the consumer. And then we have Rishi Sunak, our Chancellor of the Exchequer, saying now that they're going to put a windfall tax on UK energy groups. I mean, we've seen over 30 of these energy companies in the UK go bust because natural gas prices, all their inputs went up and they couldn't raise prices. And now our government is saying that they're going to tax them for windfalls. All that's going to do, it's going to hurt them even more. It's going to stop them from investing in new infrastructure, and it's going to probably create more shortages and higher prices. So it's not going to get better, and unfortunately these are the ingredients for stagflation, or even hyperinflation, I would say. People like Sunak and Boris Johnson flying blind, so to speak, and it's really worrying. So yes, cash is trash. Stocks and bonds are trash. What about miners? Well, if gold and silver and oil are do so well in a stagflationary environment like we do in the 70s, what do you think the companies that are involved in those businesses are going to do? They're going to do well. Yes, they are very volatile. So with that, let's quickly look at where the markets are this morning. It's 7:45 a.m. London time. We've got spot gold at $18.58. It's down about $8. Range has been 1868.70 to 1853. Yes, silver is quite frustrating these days. Even though we have bottomed, I think it's still being kept, I think, down quite a bit. Yesterday, it broke through 22 the last 2 days, but it seems to always come back to try to retest that level. I'm not worried. I'm going to keep stacking. Right now, silver is down 0.2% or 15 cents at 21.95. Range has been 22.16 to 21.92. The Dow futures up 30 points, so nothing really happening there. The NASDAQ futures up 36. S&P futures up 8. FTSE's up 31. Eurostoxx is up 13. To the currencies, sterling is up 0.8%, 125.49. The euro is down 0.4%, 106.92. The dollar is up 1/4 versus the yen, 127.17. The dollar is up about 0.2 versus the Swiss franc at 96.18. The dollar is up 1/4% versus the yuan at 667.50. And now to the Russian ruble. We're trading at 57, the Russian ruble, so still relatively strong. The low for the dollar or high for the ruble is 55. So the ruble continues to hold very solidly, I would say. To the Aussie dollar is unchanged, right at 71.00. The dollar is unchanged versus the Canadian dollar, 128.26. And the Kiwi dollar is up almost 0.5% actually at 64.96. General commodities, WTI crude is up 1% at 110.40. Brent crude is up 1% as well at 112.28. And high-grade copper is down 0.7% at 427. U.S. nat gas moving up towards $9 now. It's at 8.86, up 1/4%. And the 10-year yield is unchanged at 2.76%. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And yes, I wish you all a great day. Take care. Bye.